Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on the government's bank deposit guarantee scheme. This really came like a bolt from the blue yesterday afternoon when Helen Clark announced this at her election campaign launch here in Auckland. It is an amazing scheme. It covers banks, building societies, credit unions and finance companies. And I want to talk about two giant holes as big as this truck here that can be driven through this scheme. Now I have to say first up, I've called for a bank deposit insurance scheme for the last 4 or 5 months. I did so again last Monday. But this is more than just a deposit insurance scheme for banks. This is a government guarantee for all banks, building societies, credit unions and finance companies. And I think there are some big dangers here, 2 of them in particular. Firstly, allowing finance companies access to a government guarantee, effectively making them AAA rated. Now they still offer very high interest rates, relatively high compared to the banks of around 9 to 11%. This means that the remaining finance companies, and it's true there aren't that many big ones left, but the remaining finance companies can go and borrow money from the public at 9–10% and say to them they are guaranteed to get their money back, and it's backed by the power of the government to tax. Now this is a particular risk because we could see the likes of Allan, Hawkins, a convicted fraudster who's running a finance company at the moment that doesn't raise money from the public, but that could if he gets into this scheme. Now it's true the Reserve Bank could deny access to people like Allan Hawkins or Doug Somers-Edgar or Petricevic, but there's nothing in the details of the scheme at the moment to say they would be blocked access to the scheme. There are no rules about checking people to see whether they're fit and proper. The second big hole in the scheme is that the Reserve Bank and the government here have decided not to guarantee deposits held in banks by other banks. Now why is this important? Well, this is all about the wholesale interbank market. Now this is where the banks lend each other money, both in New Zealand, between New Zealand and Australia, and New Zealand and the rest of the world. And this is a huge amount of money. About 1/3 of the lending done in New Zealand is backed by these wholesale markets, and mostly international wholesale markets. The problem is that overseas, particularly Australia, they have guaranteed this wholesale interbank lending. The government has given government guarantees for this lending in Australia. That means banks from outside Australia and New Zealand will look at the difference between Australia and New Zealand and see that there is a government guarantee on wholesale lending in Australia, but not one in New Zealand. And that raises the danger they will be able to, or want to, pull money out of New Zealand and put it into Australia or into Germany, parts of Europe, Ireland, where they do have these blanket guarantees that include wholesale funding. That's a risk for the scheme. And the third problem here is that Helen Clark chose to make this a political issue. We are in a global banking crisis, and now's the time to be statesmanlike, to bring both sides of politics in and say this is what we're doing together. So John Key from the National Party and Bill English from National were not told about this scheme late on Sunday, and Helen Clark used it as the centrepiece of her re-election campaign launch. That is dangerous. It risks politicising an issue that cannot afford to be politicised. As it turns out, John Key and Bill English have approved the scheme from their point of view. They've welcomed it. They couldn't really do anything else, but it must have been tough for them to sit on their hands and be whacked over the head by a government using the power of its incumbency to look confident and strong. There is a danger that an opposition who are really grumpy could derail this scheme, and that's the last thing we need. I'm Bernard Hickey with a special report on 2 big holes and a political flaw in the deposit guarantee scheme.